this is something that, to me, I think is very, very important because, like I spoke about before, there's actual business standards that have to be addressed. And if I were to tell you guys that these specific organizations that I'm about to read off all sit on the committee and all make decisions together on what the financial standards will be, people would say it's a no-brainer. But people hear ISO 20022 and don't realize who actually sits on the committee. So let's read it off. The DTCC, for those of you guys who don't know who the DTCC, they are the post-trade and settlement giant in the United States. They process over $2 quadrillion every single year. The CFTC, located in the United States, Visa, MasterCard, SWIFT, who processes around $5 trillion every single year. Then you have the Bank of International Settlements, who is the central bank of central banks. You have the Bank of England. You have the European Central Bank. You have ISDA, which is the International Swaps and Derivatives Association. You have JP Morgan. And ironically enough, they actually admitted a blockchain company to this organization, and they admitted Ripple to this organization. And that's a testament to the XRP ledger's compatibility with institutions. Because if you remember what I said earlier, XRP is specifically meant for institutions. It's specifically meant for TradFi to TradFi payments to be able to settle and move money faster than what they can do today. Because you can settle with stablecoins, you can settle something instantaneously. So I know people are probably looking and thinking, how does ISO compare to blockchains and XRP and Bitcoin and so on and so forth? The way that I like to describe it is, Caleb Silver actually mentioned this on you guys' last how-to, briefly. But the physical blockchain is the road or the train tracks. Then you have stablecoins. The stablecoins are the car or the train. The tokens are the gas fees themselves. And ISO 20022 is just a roadmap for financial institutions on where to send payments and what specific industry they're sending payments to. And then we can go deeper and we can make many, many different analogies. But for all you guys to come together and realize why all these different things are important and why it won't just be one token and why it just won't be one thing that propels the digital financial revolution, I think that's important because everyone wants to zoom out on the stock chart. Everyone says, look at the 5-year on the stock chart, look at the max on the stock chart when you're making analysis, but no one zooms out on the digital revolution that we're all living through. Like over the last 40 years, we've digitized our entire lives. Value is just up next. We had Web 1, Web 2, and now we're in Web 3. And it can be up for debate what Web 1, Web 2, and what Web 3 all are. But I don't think it's up for the debate that our lives are just becoming more digitized year over year over year. And why can't we send money as fast as the email? Doesn't make any sense. Like the Fed now, the Federal Reserve actually came out with a platform called Fed Now. That's the standard that they switched to on July 14th. On July 14th, the entire Federal Reserve switched to that standard. And that's a global standard. ISO 20022 is a global standard around the world. And SWIFT mandated that by November, the entire world has to switch to this standard for business messaging. But with that being said, Fed Now specifically, for instance, allows us to have the potential to get paid every single day upon clocking out. The reason why we can't get paid every day is because our system is too congested. It can't handle all those transactions at once. It wasn't built for that. Now they build out a platform and a digital system that we can actually scale and build on top of. And the switch only happens once. This change only happens once. And I think it's very, very important for people to be knowledgeable in the space and to be understanding of where we are headed. Because it's not just Bitcoin or Solana or XRP or Ethereum or Chainlink or your favorite token, whatever it may be. It's a compilation of them all and what are institutions actually invested into. Because our whole goal is to make money. So let's follow exactly where institutions are putting their money. Let's follow exactly where they're partnering with.
So, okay. Okay. Any more on the slides?
Yeah, I have 2 or 3 more. So just so you guys get more of an understanding of what ISO really is, this document is on the World Economic Forum. It says messaging standards. Messaging standards that are compatible with ISO 20022 will be important for integration with existing payment systems for CBDCs and stablecoins. That's letting you know, like my analogy before with the train tracks and the train being the stablecoins and ISO 20022 being the roadmap, is they need ISO 20022 for complete standards for TradFi payments. That's all it does. And then Chainlink handles the blockchain interoperability. But moving forward, just so I can stress the importance on how important standards and business standards really are This document is from SWIFT. SWIFT goes on to say, it is apparent that business standards will be key to the success of DLTs. It is also necessary to gain clarity and consensus about the meaning of shared data in the multi-party business environment, whatever the technology used. Existing standards, principally ISO 20022, will have an important role to play, both as sources of industry definitions and enablers of interoperability between DLTs and existing automation technology, including financial messaging. They're telling you straight up that ISO 20022 has an important role to play for business standards, for CBDCs, for stablecoins, for whatever it may be, for payments for TradFi institutions. And for those of you who don't believe that crypto is embedded directly in ISO 20022, this is a document from SWIFT. SWIFT handles over $2 quadrillion every single year. They don't care about my opinion on whether I think crypto is involved or not, but they actively tell us it is. And then the last, this is the second to last slide I have, but this document goes on to say, and I know it may be small on the top left, so I apologize. But to find this document, and I think it's a very important document for people to read, they also surveyed 200 institutional investors in the United States, whether it's large financial institutions or regional community banks. They go on to say that most banks have projects in flight to modernize the payment platforms. While ISO 20022 is the priority, they plan to launch other programs in the near term. That's very, very important. So what programs are they launching? This document goes on to say that bank priorities in the payment space in next year, and if you look from the second to the right, it says digital assets. 69% expect to make digital assets the priority within the next year. 19% are making the priority in the next 6 months, and 1% are making the priority now. So it's not one token versus the other. But this right here embodies the entire reason why I believe that right now is the greatest time to be an investor in the crypto space, before regulations, before these institutions actually enter the space and unlock the floodgates. It's because we're living through the great wealth transfer. This document is actually from Galaxy. And those of you who don't know Galaxy, it's Mike Novogratz's company. So once again, if a billionaire tells you something, you have to listen. And his company believes that we are living through the great wealth transfer. So what's the great wealth transfer? Millennials, baby boomers are set to pass down $84.4 trillion to millennials by 2045. It's a lot of trillions. So not all that money will be going to assets or digital assets. Some of it will be going to pay for whatever. But all that money is going to a generation that's not only more favorable of this digital assets, to also more favorable of investing. So this is not something that's only going to help the crypto ecosystem. It's going to help the stock market in whole. $84 trillion getting passed down to investors to be able to invest only helps our case throughout 2045.
And so the ISO 2022, because you see that on like YouTube comments, like they spam that all over.
Mm-hmm.
So that's something that is interesting that you kind of broke that down. So if a coin is not complying with that you shouldn't invest in that coin?
No, because ISO 20022 specifically handles TradFi payments. The blockchain ecosystem is too big to be able to invest into it. And that's why platforms and institutions are building on Ethereum and Solana. They're using Chainlink. They're building on Avalanche or Polygon, and to name just a few. But in order for us to have business standards and standards for payments, because we have to know and we have to be able to trust that we're both receiving the same information if we're going to pay each other trillions of dollars or billions or millions, whatever it may be, from financial institution to financial institution. And that's all ISO 20022 handles. And the reason why I love ISO as much as I do, and I speak on a lot, the EYO community knows this as well, is because it's not going to be an overnight flip of a switch where the ISO tokens go to the moon. As we saw, the Federal Reserve just adopted on July 14th. But it's just going to be consistent, sustained inflows of trillions of dollars moving over these tokens. And I think it goes to the use case of Ripple and XRP as well, because we know the institution's top 4 picks are Bitcoin, Ethereum, XRP, Solana. And Ripple actively sits on the board of ISO. And for those of you guys who don't understand the difference between Ripple and the difference between XRP, XRP is independent of Ripple. But Ripple is just a company behind everything they're building with XRP. Ripple did not create XRP. They were gifted XRP. So XRP can last without Ripple, but Ripple cannot last without XRP.
Interesting. Gifted. How did that happen? How did this transaction happen?
Honestly, I'm not completely sure. That's above my pay grade. and I stay out of
Protect us
grown
all.
folks.
Let's protect us all. You brought up altcoin that was hugely popular over the past couple of years, Polygon. Haven't heard much about it over the past 12 months for sure. I knew, it was one of those situations where you could actually loan some of your crypto. Where is Polygon at today? What's up with it? How come it's died down in terms of hype around it?
I think it just died down from the retail standpoint. And I'm happy you brought up the hype aspect because I want to touch on that too. But institutions still document Polygon. They're still building on top of it. Will it be one of the top 10 or top 15 tokens? Probably not, because there's a lot of other winners who are ahead of it, like the Bitcoin, Ethereum, Solana, XRP, XLM, HBAR, Link, Avalanche, you name it. But institutions actively document about it. And who am I to tell an institution that they're wrong? But regarding the hype standpoint, I think it's interesting how retail sentiment changes so fast. Because if you guys remember right now, back in December, everyone was going crazy around crypto. But currently right now, we're almost at the same prices we were at in December, if not higher, for majority of the tokens that I named today. And there's no retail sentiment. I was actually reading a document a couple of days ago, and I shared it in the EYLU community. It went on to say that institutions are all in, but retail is nowhere to be found. And I thought those were very, very important words.